Well, hi everyone, and welcome to Buffett and Beyond Research Stock of the Week. And we're going over Amphenol, which you probably never heard of, which is up over 356% in 5 years. And folks, most of it in the past 2 years. So we're looking at something that has really hit the spot and has been around for a long time. So it's just not a new startup company by any means. And remember, folks, if you want to live on this beach or walk on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. And let's see what Amphenol does. Well, it manufactures electrical, electronic, and fiber optic, yes, that word, fiber optic, connectors, interconnect systems, sensors, coaxial specialty cables, and its three primary business segments are communications, interconnect and sensor systems, and harsh environment solutions. And Amphenol sells its products to original equipment manufacturers, and folks, guess who that original equipment manufacturer may be? Yeah, let's go. Amphenol is closely tied to Nvidia through the AI infrastructure supply chain, although it's more of a strategic supplier relationship than a formal joint venture style relationship or partnership. Now, here's what's going on. Amphenol supplies the high-speed connectors, cables, backplanes, power systems, and interconnect hardware used inside the Nvidia AI servers and data centers. Now, NVIDIA's AI systems like Blackwell and DGX require extremely advanced connectivity because thousands of GPUs, and G stands for graphic, P stands for processing, and the GPUs must communicate at ultra-high bandwidth and low latency. And Amphenol has publicly stated that its interconnect products are being used in NVIDIA AI systems and AI factories. The video's ecosystem announcement specifically included Amphenol CEO Adam Norwitt saying NVIDIA's groundbreaking AI systems require advanced interconnect solutions, and Amphenol is proud to be supplying those critical components. And let's look at some numbers and the clean surplus ROE. Now, the green is Amphenol, blue is the average large cap stock, mostly the S&P 500, which represents about 80% of all the stock market valuations traded on the stock market. So 21%, and think of this as a bank account. So would you rather put your money in a bank paying you 13.5% or one that's paying you 21%? And folks, we're going to look at this 21% because this is the 5-year average, but the 2027 average is going to be much higher than this. And the net income, 13% for the average stock, 30.5% for Amphenol. And the revenue, 7.1 for the average stock, 3 times higher for Amphenol. And look at that, how it's bringing that to the bottom line. Very, very nice. Now let us look a little bit closer, and we can see, well, you can't see, but we've been watching this stock as this ROE has been growing because the market likes that. And then all of a sudden last year, wow, it really, really hit the gangbusters group of stocks over 20% that we like to look at. And this year, 26.8. Next year, they expect the same thing, 26.1. Now, the retention rate is a little lower than we like in a fast-growing stock, but it doesn't need to acquire other companies. It doesn't need to reinvest it back into itself because it's got plenty of hardware that it's been working with for a very, very long time. This stock has been around for a lot of years, folks. Years to pay debt, 2.4% or 2.4 years. And Warren Buffett, or this is Warren Buffett's rule of thumb, is that looking at the debt load, and he puts it right into years to pay debt. In other words, if a company takes all the money it's making, uses it to pay debt, how long will it take? And his rule of thumb is 5 years or less. Our rule of thumb is 3 years or less. So yeah, this company is doing very, very well. And with the retention rate of 75%, folks, it's growing. It's doing very, very nicely in here. So we like this company that with this clean surplus ROE that has just been going up over the years. Good company. Now let's see what happens in 1 year. Black line is the S&P 500. Blue line is Amphenol. Amphenol up 67%, with the market up about 28% over the past 1 year. So Amphenol is more than doubling the S&P 500 over the past 1 year. And we're looking at this point in here, and we are waiting for it to drop down again. We don't know if it's going to drop down again or not in here. So we've been accumulating this stock just little by little, and just recently. And over the past 5 years, yeah, here's that big jump from last year. This is 2025 right in here. And you can see that it just took off when people realized that name Nvidia was involved with this company. And here we go. So it just shot right up, and now it's correcting itself and hanging around in here for a while. And like we said, up 356%, with the market up 80%. So we're looking at 4 times as much as the market, doing very well in here. Now this year it has been just up a few percent, maybe 12, 13, 14% for the year, which is good, but it could go a lot higher in here because it's got a large backload, or so the analysts are telling us. So we don't mind accumulating this stock in here a little bit as we go along. So folks, remember what our goal is: build your wealth faster and safer with better than average stocks. And better than average stocks, we want to see stocks that have been around for a long time and that have been making money and now making even more money. So folks, go out this weekend, take your mind off the market, be with your loved ones. Don't think about the market at all. You just take it easy, because the market will be open again this coming week. And folks, you get out there, stay healthy, stay well, and we'll see you right back here in a couple of days.